Are we live? Are we alive? I'm on the right show. Check your phone.
Hey guys.
Hey guys, how are you? Good evening, good afternoon.
Nadesh started a live.
You started a live. I'm at the office, so I was saying hello to everyone because I haven't been in the office. Am I on the right page, Cindy?
No, it says Nadesh Sharma started a live. Yes,
it does. Okay, because I'm always on the wrong page. When you manage multiple pages, where is my banana?
This is not a banana bread. This is not a catering session.
This is not a catering session. You know I wear multiple like head wraps. So okay, this is not the show about food.
It is not.
This is not the show about our crazy travel adventures.
Exactly. Oh look, Marnell just.
Oh, Marnell is here. This is the show where we're going to be discussing. I'm going to accept Marnell in a few. This show is about home buying during COVID.
Yes.
As you know, this is Cindy. This is not the walkthrough.
It is not.
This is just information. We wanted to bring you guys some great information that we received ourselves as real estate investors, as real estate agents that's been in the field, but speaking to one of the lenders that we worked with this week, we got some even more information.
Yes, because we've been getting some serious calls, and a lot of people have been, asking, can I still get a home? I just lost my job, but I started back working recently, or I've been furloughed, or did we get one where someone transitioned from one job to the next, but it was the same field?
And then there are people who transition and it's not the same field. So we figure, I tell people our job as real estate agents, even though we do have information, but I love to bring the expert in the field because our job is really to find you an amazing home that suits your needs. But then the mortgage lender is the person who's really going to help you handle those financial questions.
Let's get Marnell on.
Let's get Marnell on. Thank you. Hold on. What did Marnell request?
Wait, is that it? Yeah.
Yes, he's here. Oh, we had a couple of. We'll take the rest of you later.
And no banana bread put in orders on this live.
Oh no.
Oh, what's that?
Marnell. Oh.
I always do this to you guys. I always flip the screen the other way.
Hi, Marnell.
Hi guys, how you guys doing?
They see both of us.
I know. What's that? You think you can see my nail that popped off?
Marnell, thank you. Let me share the live, guys. This is really good information. If you guys
Let me share.
Share it. I'm gonna get to you, Marnell, in a second. I just want to make sure.
Wait, how do I share your live?
You just go to the live and you share here. The way you No, yeah, Marnell, could you please introduce yourself as Cindy sharing?
Sure. Hello everyone, my name is Marnell Garcon. I am a mortgage loan officer with Meadowbrook Financial Mortgage Bankers. I've been a mortgage loan officer for about 13 years, and my specialty is in first-time home buyers. So I take, first-time home buyers pretty seriously because, for the most part, there's a lot of intricate parts of the purchase side that can be a little bit overwhelming to purchasers. So that's where I come in. My job is to make your life that much easier so that once you walk into your home, there's no, it should be the easiest thing that you do. On my end, it's a little bit harder, but you shouldn't feel any sort of, craziness when it comes to purchasing a home. So allow my expertise to do all the hard work, and these lovely ladies will do the rest with finding your home. And together we'll put you in the dream home that you're desiring.
Beautiful. So the other day we called you because we had a client who basically was like, I have my down payment. I was in the process of purchasing prior to COVID, but I got furloughed. So then, which started a whole chain of conversation, which is how we got here. So my first question for you is, in this topic of home buying during COVID, if someone, let's walk through the scenarios. If someone furloughed, meaning they know they're going back to work, but especially if this has happened in like the hospitality field,
Right.
can they still get something right now while the rates are amazingly low?
So the short answer to that is yes. You can, in fact, obtain a mortgage even if you've been furloughed before. The biggest thing is whether or not you're back at work. So that's first and foremost. And then, how are you back at work? Are you back at work on a sort of part-time basis, or are you back at work full-time, still getting the same hours that you did previously? So the biggest thing regarding that is there can't be any significant change in the way that you're working. So if you were working a 40-hour work week, then and you're moving forward again, and your boss says, "Yep, this person is back at work with a 40-hour work week," no issues there whatsoever. However, if you're slowly getting back into it, and your hours are being cut, and now it's 20 hours. I'm going to take the 20 hours instead of the 40 hours in terms of my calculations, and you're going to be approved based on the lower amount of the hours, because that's what you're back at. So long as you're back to normal, and that goes for same thing with someone that has a overtime, right? So if they had a lot of overtime and were slowly coming back into COVID, most employers are probably going to cut your overtime. So if you're not receiving the overtime, so now I'm just focused on the base income that you would have. So just back to your 40 hours plus, whatever your salary is, and that's it. And that's pretty much what we look at as lenders. The biggest part of it again is, how far back are you? Like, are you back 100%? Or are you slowly trickling into the workspace that you're in?
Okay. So what about, so then that's a great scenario, because there's a lot of people who fit into it. A lot of people thought they just couldn't buy a home because
right. I get a lot of those calls. Right.
So now let's talk about the person who lost their job. They're not back at work. They're back at a new job.
So with that person, so long as it's in the same field, right? So let's say this is a horrible example because but let's say it's a nurse, right? Most likely not going to lose their job, but let's say for some reason they lost their job and they're going to another hospital now to work. Same sort of job that you've been in, same sort of history from before, different work. It's completely fine. Now, the only difference is if you were a nurse at the other job and you maxed out overtime, you're starting a new job. So I don't have a history of you working overtime at that job. So even if you started to work and you're getting, a crazy amount of hours, I'm only going to be able to use just your salary to qualify you on this new job, because I don't have a 2-year history of you working overtime at this job. At the other job, yes. At this job, no. So the short answer is yes, I can, in fact, utilize the new income to qualify you for a home.
Now, do you have a question?
Yeah, you mentioned, you said something about nurse. You mentioned something to us the other day in regards to if you're in school for 4 years and you end up in a job in that same, education profession, that you would be able to get a mortgage as well?
Correct. So there's a misconception out there that, you need 2 years of work history in order to qualify for a house, right? So the biggest thing regarding the education side of things is if you are coming out of college and you have a, prominent job, you're, an engineer, a nurse, a doctor, whatever it might be, you have the training history from your schooling. So the idea there is that you're well trained, and you can start working, doing exactly what you were trained to do for the last 2 to 4 years of your schooling. So the same thing would happen with the furloughed people. That would happen with these people. It has to do with the base income that they would have. I would not have a history of them working overtime or getting bonuses or whatever other work structure there would be. So whatever that nurse is making, if they're making $40 an hour working this job, then we would we would look at just the base income for that to qualify them. So if they're working a 40-hour work week, or they have a job letter that states this is going to be their income moving forward on this job,
Yeah.
then what I would need is their college transcripts to prove that they graduated and that they went to school, their diploma, and then they could have worked at McDonald's before, but now they're a nurse. So I can utilize that new nurse's income to qualify them for property.
That's pretty amazing.
No,
One of the things you mentioned, so let's just say the nurse now, she stopped working as a nurse, lost her job as a nurse, but now she decides to be a chef.
Okay. So, same scenario. If she went to school, and has a chef's degree or some sort of thing in culinary, no problem. But if there's no history of her being a chef ever, and there's a big gap in between, then the answer to that would be no. You can't leave a nursing job and then go become a chef. It's totally different. So it has to be within the same field. So I have a lot of CNAs that go to school to become a nurse, right? That's not a problem because you're in the healthcare field, and it's essentially an upgrade to another healthcare position. Same thing with nurses that then become doctors.
Yeah.
But if you're a nurse and then you decide out of the blue, I feel like being a chef today, and you go, do that, then I need to see work history of you being a chef before, and now you're going to be a full-time chef, or you need to wait the 2-year history that I would need. Unless you're opening up your own shop, then it's only one year for business owners. But if you're going to be a chef, then I need 2 years work history if you've never had previous schooling or training to do that.
So, asking for a friend, are you telling me, let's say someone quit their corporate career and decided that they wanted to get into real estate, they have to wait 2 years?
So with something like that, you'd be a 1099 person as a real estate agent, unless you're working for somewhere where you're a W-2 employee. But typically speaking, if you're switching to something where it's commission-based, it's typically a 1099 job. So we need 2 years history for that 1099 employment. Yes.
All right,
So-
I'll never know.
No new homes, no new home purchases. So right now, funny enough you say that. So as a real estate agent, I think wouldn't you be considered self-employed? Can you make the case as a self-employed person?
If you have a corporation,
1 year?
if you have a corporation, yes. So if you're getting paid through a corporation of your own and it is your business, then yeah, it's only 1 year that I would need for that.
Interesting.
Good to know, good to know, good to know.
We're taking notes.
Guys, make sure you ask any questions you may have.
Well, someone asked if real estate what's the comparison between
Last
last year and this year? Is it cheaper? No, it is not.
At least
It's
not in
more
Brooklyn,
expensive.
at least not in Brooklyn and Queens.
Because
So
it's a
I hear this.
market.
I hear this a lot, and the biggest thing is right now we're getting a lot of offers at full ask or over full ask.
Yeah.
So the real estate market during COVID, the only thing that has happened is it's been up.
Yeah.
The rates are low, and essentially it's a both buyer and seller market because the sellers are getting top dollars for their home, but the buyers are also getting in at a home the same exact way because the qualifications are much more in your favor now. You have a lower rate to work with, right? Which means your payment would be lower. But at the same time, like maybe you couldn't qualify for that house that's $50,000 more. But now that you're talking about a rate, an entire percentage or a percentage and a half less than what it was last year,
Yes.
now it gives you the room because we're only looking at the monthly payment and your qualifications of being able to handle that monthly payment. So with the lower rates, qualifications has been a lot easier for home buyers to get into because of the fact that you're simply getting a lower rate, so the mortgage would be less. For everybody out there that thinks, I'll wait next year, I'll wait, till the market crashes, or till home prices go down. I'll tell you what happens. So I mentioned, right, with the higher homes, there's a crash that happens, and the home prices are now lower, but then the interest rates are higher. You're essentially waiting for the same payment to happen, the same exact thing. So everybody thinks that, oh, I'm gonna get this house for less. Sure. So you save yourself $10,000 to $20,000, but how much did you lose by waiting to purchase a home when you were actually ready, right? The rates are low. So it's like I don't quite remember the saying, but it's like a penny saved, but the dollar short, whatever it is. But it's exactly that, because if you're thinking about saving $20,000, think about it this way. Let's say next year's rates are at 5%, right? Now I came from a world where we were refinancing people from 7.5% when I first got into the industry to like 5.75. I used to scream at people, 5.75, this is an amazing rate, and they jumped on it all day. So let's say this is 5% now that you're talking about, right? Versus a rate of 3.25, 2.875 for some qualified borrowers. You're talking about an entire 2% or more in terms of the rate over the life of the loan. The savings that you would have had by moving forward on a higher price home versus this, $20,000 that you saved by waiting for the market to crash, which shows no evidence of the real estate market actually taking a hit that way. You're losing hundreds of thousands of dollars to save $20,000 and getting a rate that's higher. You're paying a higher payment. So I always tell people it makes more sense for you to look into, like, strike while the iron's hot. The market is good. You're employed. You don't know what tomorrow brings. You could very well go into furlough. You could very well just get fired, right? And now this perfect home that you would have been able to get, you could now be in jeopardy next year of not even qualifying for that house.
Exactly. And we do those numbers with a lot of our clients because we tell people these interest rates are not going to stay around, right? So you buying a home right now at $650 or $800,000 is costing you less than it was buying at the same price last year.
Right.
Which is basically what is going to be the same thing next year. So the more you wait, the more likely you are to be paying more. You're basically paying more. Right now, you're basically buying, first, we're not even speaking about inflation and the fact like 650 is actually technically worth less next year too,
right.
And you're still paying more money on it. Yeah. So it just really makes sense the way you phrased it is when the iron is hot, strike. And right now, anybody in the mortgage industry knows these rates can't stay around. They won't stay around.
It won't make sense.
If you're able to make it happen, and I tell people, and I'm sure you deal with a lot of people, even if it means getting together with some trusted family, perhaps, right?
Sure.
I don't think people know that they can. Could you speak a little bit on that, like in terms of groups coming together or family members and purchasing together?
Sure. Absolutely. So, and I talk about this a lot regarding, let's take Brooklyn, for example, right? So there are multifamily units that people can take advantage of. So maybe you don't have enough income to buy this two-family at $800 and some odd $1,000. But if you put your money together as a family, which people of our demographics also, tend to take advantage of, you can, it could be you and your mother, you and your brother, you and your sister, whoever it might be, can go in together to purchase the property using both your incomes, and now you qualify for a higher amount, right? And if you're looking at like a two-family, you guys never have to see one another. One person stays in one unit, the other person stays on the other unit as well. With the home prices going to where they're going, you really want to take advantage of it because I don't see the market taking a dip like most people think that they are. And this is the main reason. So what happened in 2007 and 2008 was tailored to happen. There was an inflation of home prices. You would buy a house, and then in a year the house all of a sudden appreciated 20% from you doing absolutely nothing. No paint job, no new kitchen, nothing, right? So because of this trend, New York tends to have a 5% uptick per year of home values going up, right? So they typically go up anywhere from 4 to 5% per year. 20% is a huge difference. So now when the crash happened, it wasn't so much as a crash as a readjustment of those figures. Appraisers were appraising houses way over value. Bankers were, getting loans at way over the amount, and we had a lot of loans that were secured by people with very, very bad credit. So, something like this happened. Bad adjustable rates happened, and it created such a bubble in the market that a crash was inevitable. How this is different now is banking regulations are strict. It takes a lot to do what I do today. You can't just, open up shop and do it. You have to be a licensed loan officer. There are courses that you have to take yearly to keep up with those licenses. Same thing for a real estate agent, same thing for an appraiser, right? So there are market things put into place to protect the home buyer from themselves wanting to get a house that they essentially can't afford, right? So everything now has to be documented, and everything now has to be like to the money. So this is why I don't think the same thing that happened in 2008, 2007 is going to happen now, because it has nothing to do with what's currently happening. COVID was a fluke. The home prices that have been going up, and they're continuously going up, and I'll tell you one of the main reasons why they are. So there's migration is happening a lot all over New York. Whether it's someone that's that's seeing Brooklyn as a great opportunity and moving into Brooklyn, or you have elderly people that are seeing that they can no longer stay in that area anymore. COVID maybe scared them a little bit, and now they're looking elsewhere, right? Maybe they migrate. They're moving south, and I've had discussions with people regarding, just doing that transplant. The other thing is if they're moving to like a place like Long Island, right, or even upstate New York, for greener pastures or whatever it might be. That's what's happening. That's creating the home prices that you're seeing, because now Long Island is seeing an inventory that they haven't seen, because a lot of influx of Brooklyn, Queens, the Bronx are coming downwards for the, COVID scared a lot of people that are in the cities, because the cities were the hardest hit.
Yeah,
so for most, right. So for most of those homeowners that got scared, or home buyers that got scared, they kind of think, I pretty much just want to go now to a place that maybe will give me a backyard, bigger space. I can hide from my kids now instead of being like right on top of one another.
Okay. We had a question from one of our viewers, Jeff. He says he has 2 full-time jobs. For both jobs together, he makes $5,400.
Okay, say that again. You said 2 jobs, 5,400. No, it's okay.
For one of the jobs, he makes both jobs together, he makes $5,400 a month. One of this job is he's had for 4 years. Another one he's only had for 1 year. He says he can't get qualified for more than $250,000 home. He can't get qualified for a $250,000 home. They keep giving him $150,000.
So okay. So the biggest thing there is the history, whether or not he previously had a part-time job history, right? So one job is full-time, the other one is part-time. It's always going to be counted that way, whether or not you're working 40 hours and 40 hours at another job. Really? It's still, one of them is going to be considered a part-time job. The idea there is you're going to come home at a certain time. You can't really overload such hours. So the reason most likely, and I would have to talk to him regarding whether or not he previously had history of working a part-time job before. If the answer to that is yes, then let's say, for example, his part-time job is security. He previously had a security job at another place, and then started this new job now with just 1 year history at this new job. he started as a security guard as well. I actually have 2 years history there, right? Or more than 2 years if he worked the previous job. But the whole thing is, if he's working a part-time job now and he's never had history of working a part-time job before, they can't give him credit for that part-time job because he only has that one year.
Got it. He's confirmed that it's actually he's never worked part-time. So maybe
Yeah, so
we
that's
can
what they're
connect you
looking at.
guys, and maybe you can assist him with that.
Where
Sure,
are you
absolutely.
located, Jeff? Where are you located? He's a manager of a restaurant for 4 years and maybe that's the other thing too. A manager of a restaurant for 4 years and a medical assistant for a year.
Okay, yeah. So with the medical assistant, I would have to look into this, but sometimes the training comes into play as well for the medical assistant, right? So there are some sort of certifications that you get, just like a CNA, just like anybody else, that maybe can be taken into consideration in terms of that income. But I would have to verify that, especially with what's going on now.
Got it. So we'll connect you guys. I have a quick question. So for those who want to come together with family or friends or a husband or a boyfriend and wants to get maybe a multifamily or wants to get a home, what does that process look like? What do you as a mortgage lender need them to gather prior to coming to you?
So if they are a W-2 employee, meaning that they work for someone, then I would just need 2 years W-2s, 2 weeks of most recent pay stubs or two most recent pay stubs, and 2 months of bank statements to verify where you're getting the money to purchase this property. And that's for everybody, and as well as their IDs, because I need to verify that you are who you are. But once I have those things together, I can calculate the income, and putting both their incomes and their debts into consideration, that's what would give them the pre-qualification for the amount of money that they would be qualified for the home.
Got it.
I have a question. This is just something that just popped in my head. So let's just say in this group of people coming together, that person, there's one that has amazing credit or two that has amazing credit, but then there's someone who's just not that great, but their income may help. Like how does those scenarios play out together?
That someone has, okay, so you said great credit, both of them, great income, but their debts aren't so good?
No, like two has really good credit scores. Like I met someone today, the husband and wife, they have great credit scores, but now they want to bring someone else in with a lower credit score but makes good money to help them purchase the home. How does that work?
Okay, so we're always going to take the lesser of the credit.
Damn,
Always.
why?
Really?
Always going to take the lesser of the credit. So this happens all the time, right? You can't cherry pick, because if I could, I wouldn't have a problem. I'll take your income at $100,000 plus and this person's credit at $750 plus, right? Put them together, perfect loan. But if this person with the great income has a 580 credit score, and then this person's making $32,000 with a 800 credit score, I am going to go with the person that has the 580 credit score, because I do have to take that into consideration. Now, luckily for you, I do a lot of work regarding credit building and helping clients out. Sometimes there's virtually nothing on credit that actually causes your scores to be that low. It could be something as silly as you were young once, you racked up your credit cards, and you have a ton of charge-offs. But those charge-offs are now 7 years past, and they're still showing up on your credit.
Yeah.
If I get in touch with a credit specialist, they can wipe out those charge-offs, and now your credit score slowly is getting better. So, and that I take that into consideration, whether or not you're at a 680 or a 580. A person with a 680 credit score can possibly get a better loan term if they were a 720 borrower, right? So if it takes nothing for me to get you to that 720 by just working with you on your credit, I'd much rather do that and give you a lower rate, a better program where you can maybe go conventional now instead of FHA, save yourself, a ton of money in terms of the mortgage insurance. Your monthly payment will be less. So anything I can do to get you up in terms of your score, I absolutely will help you to do that. We have a rescore department right here at Meadowbrook Financial Mortgage Bankers where with a couple of things here and there, if you pay down debt, we can help you to do a rescore to get your credit score back up to where it needs to be.
I have a question. What's the ideal credit score for someone looking to purchase a home? Because there are a lot of people who have maybe like 650 and they're like, oh no, my credit score is not the greatest. But then we also hear that you can get an FHA loan up to like over 580.
Yes. So
And let me ask my question too, because maybe it can be combined with these, so you can answer it in one shoot. Regarding the FHA, a lot of people, they see it as an advantage because they have to put less down. Can you please basically break down the difference between the benefit, the pros and cons of going to FHA now?
Oh, yeah, that's good.
okay. So I'll answer your question first because you asked it first. So typically speaking, the minimum score that we accept here is a 580, right? However, since COVID, things have changed. So the minimum score now is generally around a 640. If it's a little bit less than that, I need serious compensating factors to then take that into consideration. But that's exactly why we have a credit repair department here. Because if you've done everything right, you've saved up the money and something happened that unfortunately caused you to be in the 580s or early 600s, and you need a little bit of help to get to the 640, I'll help you out to get there. It might take, a month before I can write you a pre-approval so you can go shopping, but at least then you're secured and you don't have to wait a year. You don't have to, I can help you get to that point. And then in terms of the FHA loan, so I get a lot of calls from people that say, I want an FHA loan. I want an FHA loan. And I don't think they know that, what it entails. So yes, an FHA loan gives you a lot of leeway in terms of your debt to income ratio and the amount of money that you need to put down, right? But if you have a decent amount of money to utilize, you should not be looking into an FHA loan. So let's say you're putting down more than 3.5%, right? If you're putting down 10%, 5%, and you have the credit scores that can get you a conventional loan, I would much rather put you into a conventional loan than an FHA loan. The reason being, the mortgage insurance that an FHA loan takes up front can be a substantial amount. That goes within your closing costs, and that's also calculated on a monthly basis. Now putting down less money, if you put down less than 20% down on a conventional loan, you're going to have mortgage insurance, but not nearly what the mortgage insurance will be on an FHA loan. And the upfront mortgage insurance premium that you have to pay is much less as well, and it can be prepaid at closing so that you don't have to finance that in your loan. You don't have to include that as a monthly payment. On an FHA loan, that is something that's going to stay there until the loan is met due under 80% loan to value.
Wait, so I have a conventional loan, right? Okay, what's the typical interest rate for a conventional loan?
It's wide in between. So it really depends on the borrower. I mean, I've closed people at 2.75, and I've closed people at 3.625, right? And I'm talking in terms of like a month. Every borrower is different. So if the rate shows 2.5, national rate, that doesn't actually mean that you're going to get that 2.5. There are things, it's kind of like the fine print at the bottom of the screen. It's the same exact thing. So every loan is tailor fitted to the person that's working that loan. If you're buying a co-op, typically the interest rate is probably going to be a little bit higher on a co-op than you would on a single family residence or on a multifamily unit in comparison to somebody else. It also has to do with the person's credit scores, the debt to income ratio. There's a lot. It's kind of like, I use this analogy a lot, but it's like pulling up with a compact car to fill up the tank and then having like a Hummer, and you're trying to do the same exact thing with $20 as you would on the compact car. You're going to fill up that compact car, but the Hummer, you might get a quarter tank by doing that.
So you can pay your PMI in advance of getting your loan.
Correct.
Why
You
don't
can
I talk
prepay it.
about right now?
Yeah, that's why you talk to me. Yeah, you could always prepay it. Now,
And this is why the different people, oh, we're allowed to ask questions. Yes.
Yes,
please,
Audrey. Hi, Audrey.
yes, please ask questions.
Please, please. As your,
Go ahead, ask away.
yeah, no,
Clearly, I'm asking a lot of questions for a friend today.
Sure, sure. I see you.
I speak to people like Cindy, which is why it's important you deal with people, you work with professionals. Like I said, we love real estate, one, because it's a great field, but it's also the education piece. I always tell people, I'm an educator by nature, whether it's food, whether it's this, I want people to have information so they can be armed to make the right decisions, right? So real estate is such a big investment, your home. So I want you guys to have these information. So that's why me and Cindy were very big on ensuring that we bring you people like Marnell, like Quentin, and different vendors that we work with so you can have it as well.
Exactly, because we've been through the process. I've been through the process. I've been played, and the reason I got into real estate is because I said, having the things I went through, I would never let my friends go through, and I would be the one helping them with their homes. So here we are.
This question is funny. The person said, would you consider buying in New York or New Jersey? I mean, that's subjective, I think.
I mean, it all depends on the person. Jersey is a little less expensive, and you get more space, so it's up to you on whether you want to commute.
So this is the thing, right? And I get this a lot. I'm licensed in both states, so you can talk to me about anything. But this is the difference, right? So the monthly payment, shockingly enough, tends to stay relatively around the same still, because let's say this, you're in Brooklyn, right? And the taxes in Brooklyn typically are, $5,000 under or than what's in comparison to Jersey. So you might be saving money in terms of what you need to put down in Jersey, right? So let's say 3.5% goes a long way in Jersey versus 3.5% of $800,000 in Brooklyn, or $600,000 in Brooklyn. You might be able to get a $400,000 home of your dreams in Jersey, but certain areas of Jersey can start out in terms of the taxes anywhere from $6,000 all the way up to $12,000 plus. So yes, in terms of the down payment, maybe it's better, but overall you might be looking at the same exact payment on a $600,000 house as you would on a $400,000 house because of the tax difference.
And I think people find out a lot with Long Island, right? A lot of people.
Long Island,
When you go to Long Island, the house is cheaper, but when you actually put the taxes that you're paying an annual $18,000 tax versus a $5,000 tax in Brooklyn, you end up paying more sometimes in Long Island.
I'm doing a loan now, $27,000 in property taxes. $27,000 in property taxes.
No.
Paying for the school districts and
Yeah, exactly.
Marnell, we have another question.
Sure.
How does your brokerage assess student loan with respect to the debt to income ratio? Are you taking the overall balance or the monthly payments being made, such as income-based repayment plans?
Great question. So we are looking. So I plan on talking or doing a video regarding student loans because I do think it's one area that a lot of people are getting in trouble with, right? So I'll answer her question first, and then I'll go into why that is. So the answer to that is, if you have a payment already set up, we are taking the actual payment that you have, right? So if it's a set $200 a month and has always been that, we are going with that figure. If you're having a rework number because of COVID and what's happening, and they've reduced the amount, I am still going to go back to what your original number actually was, or if not, I am hitting you for 10% of the balance of your student loans. So if your student loans are $200,000, I'm going to hit you for 10% of that amount of money. And then if you have your student loans on deferment and you don't have to pay anything, I'm still going to calculate that into your debt to income ratio, because the idea is it's not forgiven. At some point in time, you are in the midst of you having a mortgage and this debt on top of you, you are going to remake your monthly payment. So I do have to take them into consideration. So even though you're not paying anything right now and life is great, and you don't have to pay them for the next 2 years or whatever the agreement is, I'm still going to hit you for 10% of that balance in terms of
Audrey
it.
said yay, so I'm assuming she likes what she hears, so that's good.
Okay, so to the other part of that is for you guys as realtors, this is where I see a lot of mistakes being made on pre-approvals.
Would you
There are loan
start
officers.
tomorrow now?
No. So
Not
this is real.
professionally.
Not for
Real
you guys.
terms.
Not for you guys. This is on us as loan officers. So loan officers out there, not me, thank goodness, but loan officers out there are not hitting people for that debt, right? So you have people like nurses, doctors that are coming out of school with a lot of student loan debt, right? And they're seeing that there's no payment involved in it. So I'm going to write up a pre-approval for X amount of money. And that person goes, finds a house at the maximum amount of money that they're able to qualify for. Once they get into contract, that file gets sent back to underwriting. The underwriter now sees no calculation was set up for that student loan. They hit you for that student loan payment. Your debt to income ratio goes up, and guess what? You now don't qualify for this house that you're trying to get.
There goes our client. We don't get a check.
Right, exactly. And that happens a lot. That I see that a lot. It's a common mistake that people do, where they're not calculating what someone has in terms of their student loans.
Oh, this is a great. Somebody said, please save this live. This
We
is so
are.
good information.
Yes,
We're definitely saving.
share it. There's a lot of information out there that people do need to know. And look, this is why we're doing this, right?
Yeah.
You guys mentioned before how a lot of people unfortunately just got taken in the past when it came to real estate. It's still something that hurts. I'm talking to a guy now that just got his house back after 15 years of someone fraudulently selling the house under him.
What?
Right?
Wait,
He's just
wait.
not.
He just got his house back after 15 years of
15 years.
someone sold
15
his
years.
house.
Yeah. The real estate agent, in fact. He's in jail now. Yeah. So yes, there is. Except so now it's much harder to do it now because of mortgage laws and everything else, right? So, but back then it wasn't. Back then it was essentially the Wild West, and a lot of people were doing things a little bit, fraudulently. So, right. So through like a straw buy deal, after the deal was done, they refinanced the loan under somebody else's name, and then showed proof that that person was the actual homeowner with falsified information, and cashed out of the money, took the money out, and now the guy was essentially facing foreclosure because he owed this money, right? Even after proving that it wasn't him, the bank still held a lien on his property, and he hasn't paid him. I mean, he has not been able to send a mortgage payment for all of that time. So interest is collected. All of this other stuff is happening. And it's just now that his attorney, was fantastic, is helping him get out of that situation where they are now putting the deed and title back into this gentleman's name and allowing me to now refinance him back into the home for himself so he can start making a mortgage payment now. These things happen. Unfortunately, this does happen out there. And, I've seen it in my own family where we've been, taken for adjustable rates back then that people didn't know what they were signing, and get into it. And it's one of the main reasons why I do this for a living today. I talk to so many people that remind me of the headaches where my father had to scramble around to find 30 grand to, fix somebody else's mistake. Now, thankfully for him, he was able to figure it out. But what about the next guy that has nothing to be able to do that?
Yeah.
and get out of that situation. That's a foreclosure waiting to happen. And the banks, unfortunately, they don't care. They're going to want to know, you have my money. Where's my money now? So that's why we're here, and this is why we educate you guys so that you understand the home buying process. And look, just like these lovely young ladies, I take pride in what I do. I take pride in educating people because the last thing I want is for you at closing to feel like you were taken or that you still don't know what you just signed after all of this time. Yeah, yeah.
I cried at closing.
Yeah,
It was
yeah.
not a happy moment for me. I'm happy now, but I was in tears the day of my closing.
So let me ask you right now, as we come to a close. I think home ownership is probably 90% of people at some point they want it. It's something they aspire to. But also, too, there's a lot of fear and anxiety that exists because it's a big investment. What would you say? How can someone know it's time? Other than removing the emotional aspect of it, but just the technical aspect and the financial aspect and the credit score and all of these things. When is it time that you should really start considering home ownership? Or are you ready to buy?
Okay, so I would say the main thing regarding that is really just getting the education here. There's somebody in this life right now at this very moment that is figuring out, I'm ready to buy a house.
They better be, because I see some of my friends.
No, I'm telling you, it happens, and it happens with education. A lot of people don't think they can afford a house. A lot of people think that you need 20% down. I still hear this. I'm almost ready, Marnell. I'll have the 20%. I'm like, wait, hold up. What do you mean? Why do you think you need 20% down? Oh, isn't that the minimum that I need down? No.
Yeah. I spoke to a young woman the other day. She has a 780 credit score, about $40,000 toward a deposit. And she's like, I'm not ready. I need a couple more years. And she has a stable job, engineer, stayed with her job 4 years plus.
So for someone like that, I say, you don't know what a couple of years actually means, right? In the real estate market, I just used a very real number of, and if you're lucky enough, it's 5% uptick in the home value, right? So now let's say, okay, fine, you waited 2 years to buy this $500,000 home. That $500,000 home now is $600,000.
Shit, or more.
Right? So all of this waiting, all of this money put down, you're still at the same figures that you were going to be at no matter what. You're still making the same monthly payment because guess what? The rates went up. You're still making the same monthly payment because guess what? The house is more now. So all of these things that when people think that they're not ready, it really is just misunderstanding and bad information that's out there. You just don't know what's available to you. And the more you ask, the more education that you give yourself, the more you're going to be ready to purchase your home. And in terms of being ready, I have people that come to me with, I kid you not, $12,000 in their bank account or $9,000 in their bank account, and they're ready to buy a home, right? Now you might say, wait a minute, I thought you said, X amount of percentage down. Yes, that could cover their down payment. And if they don't have closing costs, that could be something that is built within the loan with a seller's concession, right? Where essentially now you're getting the seller to okay you financing the closing costs inside of your home loan. Now there's intricate things that need to happen in order for that to be okayed, but there are options for you to buy that home. You don't have to wait and miss out on a great time to purchase because of bad information or because you think you might not be ready. Talk to a professional. I'll tell you if you're not ready, and I'll tell you what you need to do to get ready. If you don't know anything at all and you're making up your mind that you're not ready, is the biggest disservice that you could do for yourself, because you don't have the proper tools to figure out whether or not you are ready. Let a professional know what it is that you think you're not ready about. I'm
Yes.
not a doctor, so I don't self-diagnose myself. If I feel a pain, I'm gonna go to the doctor. I'm not gonna wait for it to get worse. So if you feel like you're not ready to buy a home, or if you feel like you are ready to buy a home, call me either way. I will more than likely sit with you, go over everything with you, and let you know, yes, based on this information, congratulations. You're qualified for X amount of money. Go to Nadej and Cindy and go find a house.
No, and that's what we love about it. Every time I introduce someone to Marnell or Cindy introduces someone to Marnell, all the amazing professionals we work with, there's a level of integrity is the word I can use that exists within how we do the work that we do. I always say this, Marnell will let you know if you're good. I can't do it. Like I speak to, most people come to the realtor first, and I'm fine with that because I love that conversation, because people think they want to buy a house, they go online, I see a house, and they call a realtor, or they're like, Nadesh, I want to buy something. I'm happy at that step, but I still need to know how much house you can afford. Cindy still needs to know what are we taking you to see, you know? So that's why that conversation with Marnell or mortgage professional is important, because they are the one who's going to be able to tell you and tell us, hey, this is the parameters that you should be looking at.
I agree 100%. And I actually had a conversation with Cindy today that brings me to bring this up again. But sometimes you think you have everything together, right? Except on paper, you don't. So I have a gentleman that has about $200,000 in the bank. He's a business owner, okay? He's ready to buy a house.
Business owners.
He's ready to buy a house. Has a pre-approval from a bank for $975,000. So good to go, right? Nope. The realtor on the other side, who I have a relationship with, called me up and said, hey, listen, I'm going to send you this guy's information. You know, he's going to talk to you, but I just want to feel like he's ready to buy this. He has the money. I see the money in his bank account. I see everything, but I don't feel right about this pre-approval and the way that it's written up. Can you verify that the income's correct for me? No problem. I'll verify it. I go to Brooklyn, meet this guy, grab all the information from him, get into the office. I start working out the numbers. I'm looking at his tax returns. He writes off everything.
He's strong.
Everything. He's strong. He's strong. Except,
I didn't get to write, but technically Trump couldn't buy a house technically right now.
Exactly. So now this gentleman on paper, and I kid you not, this loan officer, all they did was they looked at the top line of what he made, $120,000, $180,000. They averaged it out and came up with the income. Great. But what about the $75,000 deduction that he just had? What about the rent roll that is not actually counted because it's a part of the business side, not his personal side, right? What about the fact that he writes off all of these other cars that he has? He ended up on paper making $1,300 for the year.
$1,300 a year.
For the year. For the year. And he's
$975,000.
approved for 900. So this is exactly it. So this guy does make money.
I know, right? I need a pre-approval.
Right.
You know what? It's funny that you're saying these things, because again, we get pre-approvals. Like I have a buyer who basically says, okay, he has a pre-approval for $750,000. So then he was just, but then I don't know how we got to talking, but he says he doesn't have a social security card yet. And I was asking him other questions. I'm like, do you have a green card? He's like, no. So, but he has a tax ID. So I was like, can we buy a house?
The tax ID?
So the answer to that is currently no. However, there are things out there, and since COVID, it's been a no-go. But there are programs out there that will, in the future, allow that to be something that can be done. It's not easy.
Not yet, right?
Yeah, currently that's a no, because again, I need to know that you're legal to work here, that you can in fact pay taxes and so on and so forth.
Exactly.
So yeah, you need, at the very least, you need a green card to be able to do
To
this.
buy a home. So this is
Yeah,
why I said, speaking about the mortgage lender, because some of them, they're just looking at that, because he makes money, he has
yeah, yeah,
$150,000
sure.
income. So the person just goes off the basic information, but that they're not doing the deep rooted work
Yeah,
of really getting it.
yeah. For most people, when I ask for certain documentations, the first thing is like, oh, wow, you guys want everything, huh? Yes, I actually do, because I want to know everything. So the biggest thing, and we've talked about this before, the biggest thing is what's in your bank account, right? So oftentimes the W-2s are the W-2s. The tax returns will show me exactly what I need. But often someone will say, I have $50,000 in my bank account. And a loan officer will go, oh, good, perfect. Based on that, I'll write up a pre-approval for you based on, because I can see that you have the down payment plus the closing costs needed there. Without verifying your bank account, I don't know what that $50,000 actually looks like. Did you get, is it $50,000 from your job over time that you've been depositing in there? Is it various checks that you're getting from Etsy and, all these other things that you're doing? Is it a gift from a family member that handed you that? Did you just have a wedding where all of a sudden $50,000 came out of nowhere? Or are you, sorry to say this, a drug dealer? I don't know where that money came from. I have no idea where that money came from. And if that money is dirty, if that money can't be sourced, if that money is from, a work fund or a family fund that you guys are pulling in together, and you have like a susu putting together, and $10,000 here, $25,000 there, I need to be able to source where that money's coming from to use it to purchase a property. Money laundering is still something that is real. So they want to make sure, yeah, well, it's still very much illegal. So for all the movies that people watch, for some reason, they can't gather that taking, mattress money and dumping into your bank account is a problem. I don't know where that came from. I don't know how long you've had it. About the only time people can get away with it is if they show me, I just got married, and from the wedding I got $25,000 and cash deposits. Show me your marriage certificate. Show me where you got married. No problem.
What if
That
it's
won't
like a
be too
money
much.
market account? What if I decide to sell some stocks and get a large?
That's real. There's a paper trail. There's a paper trail. Not a problem. If it's coming from your 401k, not a problem. If it's an IRA, not a problem at all. If I'm able to source it, no problem.
Okay.
Last question, because we have work out.
We gotta run now, unfortunately.
So this question is, I have a question. What do you think about the NACA program? Is it a good program?
I get this all the time. NACA is a great program if you can get it, right? And I use this if because there's a couple of caveats with NACA. First and foremost, it's for the boroughs and the boroughs only. So if you're looking at Long Island, upstate New York, New Jersey, there is a NACA program for New Jersey, but it's specific to certain areas.
Yeah.
And NACA is also income based. So the give and take there is you need to make, as a household, a minimum amount of money to qualify for this NACA grant that you're going to be getting. Oftentimes, they don't go hand in hand. All right. So take, for example, someone that's purchasing a property. They're getting a $40,000 grant with NACA. Fantastic. They make $45,000 a year, and they're looking in the Bronx. Well, great. You have $40,000, but that also is pricing you out of the boroughs that you're looking at, right? So for the most part, if you can get qualified for it, again, I say it, it's essentially, it's not, but it's essentially free money. So take it, and I will take it, and I will put it within your loan. But oftentimes, the time frame that it takes to get a NACA loan is the same thing as the home buyers that are waiting to get more money to put down. The home prices are going up, the interest rates are going up, and you're essentially just pricing yourself out over time.
Yeah.
And look, you don't have to, with certain NACA programs, it doesn't have to actually be towards a purchase. So you could have already purchased your home, qualify for NACA afterwards, and now you're getting a grant to to pay down your loan. So, you know, you could buy a property and then use that to just pay down your loan. And I think it's like you've got to stay in the house for 5 years, and there's no repayment on it
Yeah,
after.
yeah, you have to live there for 5 years.
Oh, that's amazing. Oh my God.
But you can still have like a roommate or a tenant.
You can,
Sort of house out.
right?
Nice. Marnell, this was so
It's
informative.
very real.
It's
Yeah.
super real, and I already got like some other topics. I really want us to come back at some point and talk about that seller's concession
And the
what-
student
100%.
and
loans.
the student loans, and maybe make different discussions out of it. So
Yeah.
it seems
I
like
would
the
love
people
it.
definitely want. This is the most people I've had to stay on the live for a while. You know, it's been consistent, so they've been very engaged. So I think it's information they really appreciate it, and we appreciate you taking the time.
Yes.
Not just for tonight, but always taking our calls at all
Always.
types of hours. So thank you very much.
It's my pleasure, ladies. And look, for everybody out there still listening, you know, tell your friends about it. This live will stay
Yes,
up.
and let me
Write
put
your
your
questions.
name in so people can see it and follow you. Please follow
Sure.
Marnell Garcon. He is a mortgage loan originator. He basically will ensure that whatever it is you're looking to get into, you qualify for it. And if you're not, how to get ready to do it.
Yep.
And today's topic of how COVID has impacted financing for some people, whether it's being furloughed or losing their jobs, and what the possibilities still are. Thank you.
Guys, send me your questions. DM me, DM Nadej. Let us know what questions you may have for the next topic or this particular topic. We'd be more than happy to answer you.
I'm looking forward to it. I'm gonna save the live and we're gonna talk. Thank you so much.
Bye, Marnell.
Bye, guys. Bye, ladies. Enjoy.